Hey friends, thanks so much for joining us. We have on the line Andy Hoffman from milesfranklin.com. Andy, how are you today?
Fantastic, and yet again another perfectly timed call as the end game is possibly starting.
Yeah, I think the end game is unfolding. We've been talking about this a long time, and I want to let you know here, I was doing some research, trying to brush up on my knowledge about the Swiss franc, and I did a little Googling, and I think it's funny. An article came up that I wrote that I'd forgotten about called The IMF, Swiss Franc, and the War Against Humanity. It was posted over at Silver Bear Cafe and, of course, at sgtreport.com. And then in that article is also one I wrote called Teetering on the Brink. I wrote that back on September 6th, 2011. Make no mistake about it, the Swiss franc, widely considered to be the safest currency on earth, was devalued today. If you had 10 million saved in Swiss francs yesterday, you would have lost nearly 1 million today. Everyone recalls what happened as the Swiss pegged the franc to the euro, and ever since the Swiss have been devaluing their currency. The reason I bring this up, Andy, is as you know, on November 30th, 8 million citizens of Switzerland will be voting on the Swiss gold referendum to reback the Swiss franc with at least 20% of the Swiss National Bank assets in gold, and they don't want to allow any further gold sales. What do you think the significance is of the Swiss gold referendum?
It's absolutely enormous. I mean, you go back to the history of the Swiss, which were, they were the last currency that actually had an implicit gold backing, and then even after that, they had a gold backing that was not as official, but they at the turn of the century, like all the other Western central banks, they sacrificed themselves to the altar of central banking. People talk about the brown bottom of how the UK sold most of its gold at the bottom. Well, so did the Swiss National Bank. They at one point had 2,500 tons. They sold 60% of it near the lows back in the early 2000s, and they solidified their place in the netherworld of paper money when, as you said, on September 6, 2011, they devalued the franc by 7 or 8%. And pegged it to the dying euro in the ultimate final currency war platform. Like, we don't want to have a strong currency. We want to destroy ourselves with everyone else. And of course, that was the day. It was in fact the hour that the commencement of Operation PM Annihilation 1 started. That was the hour that gold was $1,920 an ounce. So no doubt a lot of physical gold at that time was also sold in the defense of this silly policy. And of course, here we are 3 years later, and the entire European continent is on the verge of political and economic collapse. And of course, the pressure on the Swiss to de-link from the dying euro is only going to get stronger. And so while a lot of people think, well, the Swiss aren't going to vote yes in this referendum, my view is that, look, the worse that the situation gets by November 30th, and as we start this call, it looks like the end game is starting both economically and market-wise. And we talk about stocks and bond yields and currencies and commodities. There's a very good chance that you're going to get an upswelling of sentiment like you do at the end of any election campaign to vote yes. I mean, they have a chance to save themselves. I don't know if there's enough gold to back the 80 or 100 billion dollars that they need to get to 20% backing, but they certainly can get something while everyone else is standing like a deer in headlights. So, as the world worsens by November 30th, there is a good chance that you're going to see an increasing sentiment toward that. And remember, before you even get to November 30th, you have an equally cataclysmic vote in Catalonia, Spain on November 9th, which the Spanish government right now is desperately trying to fend off. But I think that they're going to vote to secede from Spain. That's 25% of Spanish tax revenues. That will cause the breakdown of the Spanish state as we know it. And heck, just yesterday, Italy's five-star movement, led by that Beppe Grilli, which has 25% of Italy's parliament, put out legislation to secede from the euro mechanism. So again, we're talking about some major, major movements underway that are going to undermine the bankers and certainly undermine any remaining positive sentiment toward the Swiss franc's current paper arrangement.
And let's talk about the tyranny of the bankers. Now, in this case of the one I wrote, Teetering on the Brink, Safe Havens Annihilated, I just want to remind people, because this stuff does go down the memory hole, right? The US dollar was once backed entirely by gold, thus earning the term greenback. The Swiss franc was once 40% backed by gold and silver, but in 2006, this is recent history, folks, the Swiss had to sell its gold and silver reserves to join the IMF. Today, not a single solitary currency on the face of the world is backed even 1% by gold or silver, as all nations have inflated their currencies to unprecedented levels in the last 50 years. You write about this ad nauseum, Andy, and I want to make special note of the line above. Quote, the Swiss franc was once 40% backed by both gold and silver, but in 2006, the Swiss had to sell its gold and silver reserves to join the IMF. When we talk about the tyranny of the bankers, when we talk about banksters versus humanity, this is what we're talking about, right? We're talking about the IMF and this monolithic plan to enslave humanity to fiat. And you talk about the fact that the Swiss might have a chance to wake themselves up, might have a chance to save themselves. Well, look at the Scots. The vote was stolen. Look at Ron Paul running for president. The vote was stolen. I don't know that these folks are going to be able to save themselves because I suppose the vote will just be stolen.
Well, I wouldn't try to speculate on what's going on there. I mean, they are the last remaining direct democracy. They certainly have a good track record with their votes. Look, it all comes down to sentiment. I mean, you can't steal sentiment. You can't steal a vote when the sentiment's that powerful. As far as Scotland, I don't think the sentiment was ever as powerful as either the Catalonia or the potential for what could happen in Switzerland will be. So we'll just have to see what the markets will be at the time. I think Catalonia is going to vote yes regardless, and I think Switzerland sentiment is going to be determined by how bad the state of the world is on November 30th, and the way things are going right here. I mean, we're talking about bond yields around the world have now hit on average an all-time low. So again, what I've called for months and months now, the most damning proof yet of QE failure is out there for the world to see. I don't think anyone's left that's actually truly saying recovery anymore because it's obvious. You're seeing crashing commodities, crashing currencies, crashing bond yields, now crashing stock prices, crashing economic data around the world, and of course, geopolitical tension, wars, all these kind of things. It's really, the whole propaganda game is broken. It's all a matter of, can they keep the markets up with money printing enough to stave off this deflationary episode? And the answer is going to be no. As I wrote yesterday, the title of my article was, "The powers that be are losing control of paper markets. Physical next." They are losing control of the interest rate markets, no matter how much they want to say things are going well. Everyone sees global interest rates plunging to zero, which is what I predicted they're going to do all year long. They see oil prices, copper prices, even wheat prices plunging into oblivion. They see the currency crash that I've been talking about forever. I call it the single most precious metal positive factor imaginable is the currency volatility caused by this flight to safety in the dollar. And of course, now you even have the stock markets are under pressure. So again, you're going to see probably a dramatic change in sentiment toward the global economy, toward the outlook for QE in the next few months. Just look Wednesday, just last Wednesday, they put out those FOMC minutes, which forever I have said are doctored, because there's no way that the FOMC a month ago was talking about a global economic slowdown, and all of a sudden it just came out today. No, they are worried about it today because it's happened so rapidly. And all of a sudden the talk is not about the considerable amount of time to Fed hikes, it's whether they will hike at all. And of course, we know in reality it's all a fake it anyway. They're never going to hike rates. But the question is, when will, as I call it, the Yellen reversal happen? When will the Fed overtly say we have to abandon the tapering and go into a new round of QE? Could it be October 29th, right before the election? Will they wait thereafter? Will the markets wait for them? We will see, but it's coming soon. And of course, the second part of that article is physical next. We are talking about massive, massive dislocations in the physical markets around the world right now, which we can discuss in a second.
Well, Andy, you talk about the powers that be losing control over the paper markets. We absolutely need to check in and talk about the Shanghai exchange, because that's where all the action is in the world, at least in the physical precious metals market. So let's definitely talk about that. But I do want to point out for everybody who is still cozy in the belief that they're wealthy because the Dow has performed well and their 401ks are burgeoning. Their stock portfolios are back at all-time highs. I know this audience is informed and is very dubious of what's happening on Wall Street. But let's just remind people what Zero Hedge reported happened yesterday, which I guarantee you the sheeple are unaware of. And that's the fact that someone was desperate to sell and did sell $750 million of stocks in 1 second, which showed the blatant illiquidity of the market because of high-frequency trading. There's nothing more dangerous than a market that is fixed, fascistly fixed, and only supported by the fascist entity like the Federal Reserve and the plunge protection teams, which have inflated this bubble. I just want to remind everybody again, physical precious metals is what we talk about because if you don't hold it, you don't own it. And I'll tell you what, Andy, when this system comes crashing down, it's going to crash down fast because if they could take down $750 million worth of stocks in 1 second, imagine what they could do in 66 minutes.
Well, of course. And again, you talk about stocks burgeoning the IRAs. Again, the average net worth is down huge, and it's mostly the 1% that have made any money. But if you want to look at it deeper, there's a reason why hedge funds are going out of business and why CalPERS and Texas teachers just got rid of hedge funds, or as I called them years ago, hedge bombs. It's because they're not making money. They're not outperforming the market because they don't realize that the only parts of the market that are up are the indices themselves, thanks to the PPT buying. On average, the average stock is in a bear market now, down 20 to 30% across the board, and in some sectors a lot worse. So again, it's very misleading to look at the Dow Jones Propaganda Index because you don't realize just how few stocks are participating. And as you said, liquidity is at multi-decade lows when you take out the HFT trading. And of course, retail participation hasn't been this low since probably the 1990s right now. As for the physical markets, we talk about Shanghai, but you can look right here first. I mean, you look at the U.S. Mint and the Royal Canadian Mint. Both had record Silver Eagle sales last year, and both are on pace to exceed those records this year. In fact, October has been the strongest start for Silver Eagle sales at the U.S. Mint in any month back to the record month, I think, was 2 or 3 years ago. And then, of course, you look at what's going on in Shanghai, as you said. In the silver market alone, 90% of the inventories have been withdrawn since the what I call alternative currencies destruction attacks of April 2013, which was the day after Obama had his closed door meeting with the too big to fail banks. So right now, I wrote an article last week called $50 million of silver. That's it. Yes, there's only 90 tons or so of silver left on the Shanghai Exchange. That's worth $50 million. There's got to be, I mean, I know people who can take out $50 million worth of silver. That's how little there is. And again, they just opened up the Shanghai Exchange last month with its international board inviting all the international players to come in and buy physical. So in silver, I mean, it's comical how little is there. And even what's purported to be in the COMEX is tiny. It's $1 billion if you believe it's even there. And they will tell you themselves with their waiver that you can't trust their data. And when it comes to gold, I mean, incredibly powerful news this weekend when the president of the Shanghai Futures Exchange admitted and confirmed all the private estimates out there that 2,000 tons plus of gold were taken from the Shanghai Exchange in 2013. Okay, that's just Chinese consumers he's talking about, not anyone else in the world. And since only 2,700 tons or so of gold is produced in the entire world, that means the Chinese consumed about 3/4 of all the world's mine production, at least in 2013. And it looks like we're on pace this year for global gold demand to be around the same levels as last year. So again, we're talking about just gaping disparities between the physical and paper markets. And as I wrote yesterday, they're losing control of the paper markets, physical next. And again, it's a lot easier to lose control of physical markets because you can't manufacture gold and silver, and there's so little of it out there. And remember, there's a reason we call silver the financial Achilles heel of the world. There's just so little of it out there. I mean, my God, we had massive supply shortages in 2008, then 3 years later in 2011, then 2 years later in 2013, and here we are in 2014 with prices pushed below the cost. I mean, not just below the cost of production, way below the cost of production. As in, if the year ended today with prices at $17 and change, I can't even comprehend the write-offs, the mine shutdowns, the capex collapses that are going to go on the silver industry and the gold industry as well at $1,200 an ounce.
Yeah, it's truly stunning, and I want to remind people, we talk about this a lot, Andy, but the silver to gold ratio being mined out of planet Earth as we speak is 9-to-1. The silver to gold ratio in paper form, because of this Wall Street and central banking malfeasance, is what, 65, 70-to-1? So that is the hardcore fact. What is happening in Shanghai on the exchange with 90+% of the physical silver inventories being drained is the reality. And as we've said a million times, we can see the men behind the curtain, and nobody buys their false reality, at least those that are listening to this show. Hey, I just want to say before we lose you, I know you're up against a meeting, as am I, so just time for a quick update here. I want to let everybody know that Harvey Organ's website, as most of you know by now, was taken down by court order, and he can't find out why it was taken down, but Harvey will be posting his daily updates for his readers over at Silver Doctors, and we all like the doc. I know you've spoken to the doc too, haven't you, Andy?
Yeah, I just did a podcast with your friend Rory, with the doc and several others last week, and I'll remind everyone that Miles Franklin this coming Thursday is having an all-star silver webinar panel that I'll be hosting with Bill Holter, with David Morgan, Steve St. Angelo, and of course Harvey Organ, if you want to ask questions to him about his blog and about the silver market in general.
Oh, terrific. Well, send me that link and I will sticky that at the top of SGT Report. Before we let you go, Andy, can you just give me a silver number? If you had to, knowing everything that you know about the debt bubble, about the currencies being devalued internationally, take everything you know, the money that's being printed by the Fed, if you had to put a price on physical silver, would you dare? What do you think it's worth if it could trade freely today? Just a guess.
Well, I've done the simple math, the same math that held in 1980, the same math that held in 1980 BC. I mean, if you simply want to do calculate the amount of money that's been purported to have been printed, and you divide it by the amount of gold the U.S. purports to own, you get a number of $15,000 to $20,000 per ounce gold. Of course, the amount of money that they print is dramatically higher than they say. Heck, they even don't produce the M3 number anymore, and we know about all kinds of swap agreements and secret loans and all kinds of things that they do that's more. So there's obviously a lot more money. And as for the amount of gold, I doubt that any of it exists, let alone 8,000 tons. And each dollar that they print, that estimate goes up. But let's stay with the numbers based on what they purport. That's $15,000 to $20,000 an ounce per gold. And of course, if you use, what I use as my target price for the gold-silver ratio of somewhere between 5 and 15, then you get $1,000 to $4,000 an ounce silver. And again, these are just rough numbers to show you just how undervalued they have become compared to the money supply that's been printed.
Yeah, I want to back you up on that. If we take a $10,000 gold price per ounce, and we know that the actual mined amount coming out of planet Earth today is closer to 10 to 1, it's really 9 to 1, I think, 9.5. 10 to 1 would be $1,000 silver. The bottom line, Andy, is for everyone listening, and I know you all know it, $17.50 silver is a steal. It's a bargain. You can either choose to ignore that, or you can choose to do some dollar cost averaging and acquire. It's what I do. It's what Andy and I suggest others do. Andy, if they want to take advantage of any deals you guys can offer from Miles Franklin, can you tell them how to do that?
Absolutely. And all I could say is to remember, when you're buying silver or gold, you're not investing, you're saving. And so you sit and wait for everything to collapse against it in time, which all paper systems do. As for Miles Franklin, again, we're finishing our 25th year in business. We'll be competitive on price. We'll give you the best service out there. And of course, we have our I think, industry-leading storage program at Brinks Canada. Just call us at 800-822-8080 or email me personally at ahoffman@milesfranklin.com.
Well, Andy, thanks so much for your time, as always. I really do appreciate it.
And so do I, Sean. I look forward to next time.
All right, brother, hang in there. Thanks for joining us. And I want to thank each and every one of you for tuning in and hitting the like button if you actually liked this content and want more of it. Please do share this information with others, because Andy and I both feel that your time and their time is running out. Thanks for visiting us at SGT Report and thelibertymill.com. And you can check out Andy's entries every day over at Miles Franklin, the Miles Franklin blog at milesfranklin.com. Thanks for joining us, guys. Bye-bye.